Here from New Street Research just shared some numbers about the Model 2, which it seems he expects to be announced probably on March 1st. And if his numbers are true, the world will be shocked again. Sawyer warned us that the automotive industry will change forever after the Model 3 unveiled back in 2017. And indeed, it did. Model 2 is critical to the continued success of Tesla, and we should learn a lot more this week about it. Here is an overview of what to expect in 4 slides. Pierre is a pretty good analyst. He outperformed the market since 2009, so that's pretty good. Let's hear what he has to say. New Street Research says we expect the Model 2 to be 15% shorter, 30% lighter, and have a 25% smaller battery compared to the Model 3. We looked at how internal combustion engine compacts compared to mid-size ICE sedans and extrapolated the comparison between the Model 3 and ICE mid-size sedans to reach this conclusion. The Model 3 completely obliterated the BMW 3 Series. The Model Y already beat Toyota Camry and is about to beat the Toyota RAV4 and even the Corolla, and the Model 2 will obliterate the auto industry completely. There's going to be no close second. We expect the Model 2 to be 37% less expensive to build than the Model 3. Half of a difference derives directly from the car being smaller, the other half mostly from design, architecture, and manufacturing innovations. This means a $21,600 cost of goods sold at scale, including full self-driving hardware. Here are all of the numbers. Let's dive in. We have manufacturing costs going down. Overall, depreciation, labor, and other are all less, and here's why. Process innovation, such as gigacastings and structural battery packs, reduce the number of required robots, and these, of course, then reduce labor as well, and then energy, logistics, warranty, overhead costs all correlate with size. We have body and exterior costs, which would be reduced as well. Here you can see how much of a reduction comes from just the vehicle being smaller. And then here, how much of a cost comes down simply by providing cheaper options, by making the vehicle not as good when we compare it to the Model 3. And then here we have everything that comes from innovation. For example, the battery cost will come down quite a bit from innovation. And even for things like interior, they are assigning some innovation as well, although primarily that's because of a lower spectrum. Overall, a pretty good summary right here. We expect that Tesla to eventually be priced at $25,000 with $27,000 average selling price excluding full self-driving with a gross margin of 20% or more. Then they have BMW-owned Mini Cooper vehicle, Mini Hardtop, compared to Tesla Model 2 and a Toyota Corolla. Excluding the EV powertrain, we expect Model 2 material costs to be similar to those of a Toyota Corolla with the addition of a full self-driving hardware, which would result in a difference of $1,000. The Model 2 will retain all what makes Tesla unique today: autopilot and FSD, screen experience, superior performance, and range. In addition, the total cost of ownership of the Model 2 will be lower than a compact equivalent of the Corolla. That, I think, is pretty obvious at this point. This means Tesla will be able to price at a significant premium to an economy compact, although more attractively than a premium compact, which would be a Mini Cooper. So you'll probably have buyers from vehicles like this one flocking to the Tesla Model 2. Implications: Tesla can maintain a gross margin heading towards 30% for autos with Model 2 and FSD both increasing in the mix. Moreover, at $25,000 MSRP, Model 2 addresses 80% of the car market and paves the way for Tesla to exceed 12 million units and $400 billion in auto revenues in 2030. I think there is a good possibility that just the Model 2 alone could potentially eventually sell 12 million units per year. Because he is only projecting a 37% decrease compared to the Model 3, while we know Tesla is aiming at 50%. Although I think he is closer to the truth saying that 37% short term, Tesla Model 3 was supposed to be a $35,000 car, and now with tax credit, you can sort of get it for that. And the refreshed Model 3 with 2 gigacastings in the front and the rear and a structural battery pack may actually get us closer to that actual $35,000 target that Tesla had set for itself in the beginning. So Tesla usually is late. Like Elon Musk said, here at Tesla, we specialize in making the impossible merely late. But even with peers' numbers, if we just make the Model 2 37% less expensive to build than the Model 3, the numbers will still be absolutely mind-boggling, because you compare that to Toyota Corolla that has margins in mid-single digits versus the 20% expected, at least, for the Model 2. And if we did get this Model 2 announced, I think initially at least it's going to sell for quite a bit more than just $25,000, just like the Model 3 never really sold for $35,000. Right now in the US it sells for $43,000 almost. Charlie Munger has been negative about Tesla recently, and Elon responded to this tweet. This was asking which company, basically, which stock should Berkshire Hathaway invest in. It has over $100 billion in cash, and Elon Musk clearly hence Toyota, because there's no way Charlie Munger and Warren Buffett would invest in Tesla, right? Munger could have invested in Tesla at $200 million valuation when Elon Musk had lunch with him in late 2008. Currently, Tesla's market cap is about $650 billion. So if we divide that by 200 million market cap at that time, we get a 3,000x? That's crazy. If you invested just $100,000 back then, how much would that be now? 325 million. I think Farzad raises a very good question here. Is he going to Investor Day? He should. He really should. Although I think most likely, because Charlie Munger is a value investor, right? You could say that probably. I think he is thinking of toilet paper, which has been proven to be a very lucrative investment in just the last few years, right? If Twitter was still a public company, this might be me thinking between Twitter and Tesla, because probably Twitter would have dropped like you would not believe. I think there is also a good chance we might learn more about the Cybertruck on Investor Day. We also have some important news from The Information. Elon Musk has reportedly approached artificial intelligence researchers in recent weeks about forming a new research lab to develop an alternative to ChatGPT, the high-profile chatbot made by the startup OpenAI, according to two people with direct knowledge of the effort and a third person briefed on the conversations. I wonder if he would put all of this effort under Twitter. And more news, Tesla is offering some huge discounts of up to $12,240 off demo Model S and Model X vehicles with less than 50 miles on them in the US. Many have been expecting price cuts for these two vehicles as the inventory levels for them are relatively high compared to, for example, the Model Y and also the Model S and Model X. They are very low volume vehicles. But also so many people are talking about hardware 4, and if you are buying a more expensive vehicle, you probably want the newest everything. Maybe if you are buying the Model 3, you're not as concerned about it. Still, you are concerned, but if you're buying a vehicle that is 100,000, you don't want that to not feel new just a few months after you bought it. So that is what this might be about. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.